So China cracks down on the ride-hailing firm Didi, and its American shareholders get an expensive lesson in Xi Jinping risk. Joining us now, Michael Pillsbury, director of the Center for Chinese Strategy at the Hudson Institute. Michael, welcome back. It's been way too long. Actually, China hadn't done anything really bad or interesting until this. This is interesting to me. But here's the way I'm going to frame this. I think American investors, should know that these Chinese companies have fraudulent accounting. They will not show their paperwork to our Public Accountability Board. And that's the reason why Robert O'Brien and I took the thrift savings plan, retirement plan, out of investing in China. In other words, the lesson I learned here is, yeah, China's cracking down on private companies, but you couldn't believe them in the first place because they're all phony and fraudulent.
Well, that's right. And I remember you working on this directly with the president, Larry. So in a way, what's happening here with the decoupling of the capital markets is the outcome of your work. Congratulations.
Yeah. No, I mean, it's like we tried to warn them. You know, I was reading various editorials, but I don't think they really understand that. Look, all these companies have become an instrumentality of the Chinese government, haven't they? They have to give up information to the government. I mean, isn't that part of the problem?
Yeah, and China is very clear about it, that they've got to have Communist Party representatives at the top of their leadership and follow the party's rules. So this is not a secret anymore in China. It's quite a burden on some of these companies, as the Didi drop has now shown.
So how much, you know, China cracking down really not on this ride-sharing company, Didi, but other companies too. I mean, they cracked down on Jack Ma's aunt, the financial company, and they'll do much more of this. Will this hurt China? That's another thing, Michael. Is it going to do damage to the China economy?
Well, they don't look at it that way, Larry. They see this as what they call a win-win for China. They want to protect their big data. They're quite certain that we are going to come at them through these IPO companies and steal their consumer big data. This is how they see the future of the global economy, as a data-centric economy. Secondly, they think this is a security move, that they don't want the Americans to continue financing these huge IPOs. But in the sense of hurting China, it certainly hurts the private sector in China. It's making the whole economy move toward what I think Xi Jinping wants. He's been pretty clear about it in his speeches. He wants a state-owned, state-controlled economy with something like 30 or 40% of the economy can be in private hands, but nothing strategic, nothing important. All of that's got to be under the state-owned enterprise system. I
think that's a key point. I mean, Xi Jinping is, in a sense, Mike Pillsbury, overturning, you know, 30 years ago, 40 years ago, the Deng Xiaoping free market reforms. Yes. And China's becoming a more and more closed society. And I guess I'm asking, will that not catch up to them at some point in a negative way? They're doing damage to themselves, it would seem to me.
Well, from our economists' point of view, China never should have had the 30 years of growth at 10% a year. Nobody forecast that. So now when we go into uncharted waters in the future, our economists are saying, no, it's inefficient. You really can't have state-controlled enterprises dominate your whole economy. But our economists are a little bit embarrassed that their thinking did not apply over the last 30 years. So can Xi Jinping do this? A massive foreign exchange reserves, $2 trillion, this unlimited theft of technology, and up until the last couple of days, this fairly unlimited American capital investment. I think you've mentioned before, Larry, that there's more than $1 trillion of equity, Chinese companies in the New York stock exchanges. So they've had a free ride from us. We've even helped them a great deal. Maybe as President Trump's policies are continued by Biden, this will cause something of a slowdown in China itself. But this is a real shock to a lot of our CEOs, I think, that this regulation that was issued on Tuesday, warning Chinese companies, think twice about going public on American stock market because of the potential security threat that the Americans will steal your big data. this could be a big blow for Goldman Sachs, J.P. Morgan, Morgan Stanley, those who've been investing heavily in sponsoring these IPOs in Chinese tech companies. Could be very bad news for some of our American CEOs today.
Last one, Michael Pillsbury. In your judgment, will President Biden hang tough on these China policies? Will he hang tough, for example, on keeping the thrift savings plan and retirement money out? Will he hang tough on the public accountability regulations, which actually were supposed to kick in this year in 2021? Will he?
Right. Well, this is a lot of your work, so you and I have to hope that President Biden continues it. So far, he's reversed himself completely. He used to say during the primary that China is not competition for us. That's almost an exact quote. Now he's changed it to China is competition for us, and he's made this the hallmark of his administration. So it seems to me he's got to follow through, or he'll be very harshly criticized for letting China outsmart him.
All right, we'll leave it there. Michael Pillsbury, thank you very much. Hope you come back soon.